What's up, everybody? My name is Zach Pasquarello, and I own my own bookkeeping business, Harrisburg Bookkeeping. I do a bunch of things. I teach people how to start their own bookkeeping business, but I also obviously do bookkeeping for small business owners. So this video is going to serve two audiences. It's going to serve people who are real estate investors or maybe office managers of the real estate investor, people who own their own business and they want to learn how to do their own bookkeeping. And this is also going to help other aspiring bookkeepers who want to learn how to do bookkeeping specifically for real estate investors. So in this video, I'm going to spend the next 10 to 20 minutes just breaking down the most basics and how I would do bookkeeping for a real estate investor. All of the bookkeeping I do is exclusively with QuickBooks Online. So I only work with their software. I don't actually work with QuickBooks Desktop. So I only work with QuickBooks Online. So if you want to be my client, you will need to be already using QuickBooks Online or be willing to switch to QuickBooks Online. It's becoming increasingly more expensive, just like everything else. You can get a pretty good subscription right now for about $50 per month. So it's not as cheap. It used to be $30 a month 2 years ago. Now it's closer to $50 a month. But either way, the software is great, super helpful if you are a business owner or a bookkeeper. So I'm not going to waste any more time. Actually, if you want to schedule a one-on-one meeting with me to learn more about bookkeeping, there is a link in the description of this video. You can schedule a meeting with me anytime. Okay, let's not waste any more time. Let's jump right into it. Okay, so this is what QuickBooks Online looks like. So I just created a fake account for real estate investors, and I imported some transactions here. So we have the checking account right here and the credit card account. So this is the bank feed. This is one of the first things you should do if you're opening up a brand new QuickBooks account. You should connect your bank account to your bank feed. This automatically pulls in all of your bank details, all of your transaction details. Now, all of these transactions are specific to a real estate investor, but if you have a different type of business, then the same concepts apply. So in QuickBooks, up here we have the plus new button. In the top left-hand corner, this is where you can manually add a bunch of transactions, but I recommend don't waste your time with that. Instead, go here to banking and then go to the bank feed right here and link your account. So your checking account, your credit card accounts, you can link them directly to QuickBooks, and then it pulls in all of your information just like this. Okay, now if you are a real estate investor, the very first thing I recommend you do if you have more than one property is you need to go into the gear icon in the top right-hand corner. You need to click Account and Settings, and then click Advanced, and then go here to Categories and Track Classes, Enable Class Tracking. This way, if you have multiple properties, you can allocate each individual transaction to a different property. That way you can run a profit and loss per property to see how profitable your properties are. Very important for real estate investors. Okay, so now that we have class tracking enabled, I'm going to show you really simply how you can categorize transactions. So the first thing I always do is I always sort by the description. That way we group together all of your common transactions, your common expenses. So in this particular example, this is an ATM withdrawal, so it's probably one of two things. You are probably either buying supplies or you are paying contractors. Now keep in mind, anytime you pay somebody with cash or a check, it's really important that you keep the receipt and also make sure you get a W-9 from everybody who provides you services. That way you can give them a 1099 at the end of the year. Okay, so for this particular example, we will just say this is an ATM withdrawal, and we will just say that we purchased supplies. So this is a brand new QuickBooks account, so we will need to add this as an account. I'm going to do this multiple times, so I will show you how to add an account. So we just go here, we choose expenses for the account type. For the detail type, it's not super important, but we do want to make sure that it makes sense. We'll choose supplies and materials, and we'll also name the account supplies and materials. So now on your profit and loss statement, it's going to show this transaction is going to be categorized under supplies and materials. Now, if you have the vendor, great. I always recommend every transaction should get a vendor. So just for this particular example, we will just say B&G Supply Co. Okay, so we took out $200 cash and we paid B&G Supply Co. Now we add this transaction. Now this transaction is being added to our books, to our general ledger, to our profit and loss. So as we add these transactions, they will be added to our accounting information. Okay, now let me show you the really cool thing. Now that we have BNG in the system and we have a transaction with history, now we can click on this button right here, categorization history, and we can see if we forget, how do we categorize BNG Supply Co? Oh, it's supplies and materials. We just click that button, click assign category, and then it automatically assigns the category. This is really helpful if you have a ton of vendors and a ton of transactions and you can't quite remember, how am I categorizing these particular transactions? So this is asking you if you want to enable rules. I always say no. I never recommend using rules. Okay, here next up we have check number 124 for $5,400. Now we're going to just simply look at the check and who did we pay. So for this example, we will say that we paid John Smith. And now this is really important. Scroll down here and you want to make sure that you track payments for 1099 if you're paying an independent contractor or even another business. You still want to track them for 1099s if they are providing you a service, and you get their W-9 and then you fill out their address and you fill out their EIN right here, their social security number. That way you can use QuickBooks to automatically send them a 1099 at the end of the year. So this is super important. So we got John Smith. We'll save that. And now we will say that John Smith will create a new account. And we will say that this is cost of labor. And we'll just call it contract labor. All right, now we are good to add that transaction. And just for the sake of time, you guys can rinse and repeat the same concept there, but we will just go ahead and just assume that we're paying John Smith again. And now let me show you. Okay, so let's add a new class here. So let's just say that we paid John Smith for 123 Main Street to do some repairs. He's working on 123 Main Street. And then also we forgot to add a class to that previous transaction. So we just click the magnifying glass up here in the top right hand corner and we go to that previous check. And here we can say, okay, check number 124. What class was that? Oh yeah, that was 5 Dolly Street. Just random properties I'm making up, 5 Dolly Street. So now we can, whenever we look at the profit and loss, we can sort by class and we can look up, okay, this 5 Dolly Street had $5,400 worth of expenses. And then we can compare the expenses to the income from rental income, or maybe we're flipping properties. And then ultimately at the end of the day, we can see how profitable were we on these properties. Here's another check. I'm just going to say with supplies and materials, you should give it a vendor, but for the sake of time, I'm not going to give it a vendor. We will give it a class. We'll just say that was for 5 Dolly Street. Okay, now here we have our credit card payment. So in this particular situation, we are transferring money from our checking account to our credit card account. Now it's super important that you do this correctly. You can do it one of two ways. You can record it as a credit card payment, or you can just record it as a transfer. So we are transferring money from the checking account to the credit card account. And now if we go over to the credit card account, here we can see QuickBooks automatically recognizes we have this credit card payment. We can check the date 7/23, date 7/23. The amounts match up. And so all we have to do is match that transfer. So we're moving money from one account to another account. It's not an expense. It's not income. It's just a transfer from one account to the other account. Okay, so we'll go back to the checking account. Now here, June 30th, we have a deposit for $100,000. Now this is, let's just assume you're opening up a brand new business. So this will just be owner's investment or owner's equity. This is your personal money that you're putting into the business. So we're going to do equity, we're going to do owner's equity, and now we are categorizing this $100,000 as owner's equity. And now we can even create a class for general overhead or general expenses. And I would use this class for any transaction that is not specifically for a specific property. So now this is not an expense, this is not income, this is an equity transaction, which means this $100,000 will show up on our balance sheet. So when we look at our balance sheet, our checking account our asset is going to increase by 100,000, and our equity, our owner's equity, is going to also increase by 100,000. Okay, now we have a ton of Home Depot transactions. So let me show you. It's really simple how you can categorize multiple Home Depot transactions. So we can just select this box, hold down the Shift key on your computer, and then select that box. And then all we have to do is click Update, and then we can say it was an expense. We can say we paid Home Depot. We'll add a new vendor for Home Depot. This is very important. For the contact type, make sure it's vendor if it's a vendor and customer for a customer. It's very important. Company name, Home Depot, and save that. Now the category, supplies and materials. Now for the class, so this is important. If you're doing class tracking, you can't necessarily categorize a large number of transactions all at once because you need to identify the particular class that was associated with that transaction. But for this particular scenario, I'll just skip giving it a class this time. And now the nice thing is, if we click on this Home Depot, we can give it Home Depot like that, click on categorization history, choose supplies and materials, and then click on assign category. And then we just click on add. And then if you see here, now all of these are automatically categorized as supplies and material and Home Depot. So now all we have to do is select all these transactions and we can just click accept because they're already correct. However, keep in mind, these are not appropriately classed to the right property. So they're correct with the category, correct with the payee, but not correct with the class. So you got to make sure you stay on top of that. Okay, here we have Liberty Mutual. You can quickly add vendors. Sometimes QuickBooks recognizes businesses, and we can quickly add this vendor right here, Liberty Mutual. If you want, you can add details by clicking this, but either way, we'll just add Liberty Mutual, and this is insurance. So we can say that this was an expense, the detail type, we can make it insurance, pretty straightforward, pretty cut and dry. Liberty Mutual, insurance, and then once again, Liberty Mutual. See, QuickBooks automatically recognizes that. You always want to double check though. Sometimes QuickBooks does get it wrong, so don't always trust whenever QuickBooks tries to automatically recognize things. Okay, wrapping it up here, we have Lowe's. Once again, that's pretty straightforward. We can just add Lowe's real quick, add it as a vendor, and we'll say that supplies and materials. Okay, here we have Starbucks. So let's just say you went to grab lunch or a coffee at Starbucks. Now we can say that this was meals. So we have Starbucks, and then we have expenses, and we will call it travel meals. Just keep in mind, meals are only 50% deductible, even if you're conducting business on your meals, or meeting with clients during your meals, or holding job interviews at a restaurant. Meals are only 50% deductible. So keep that in mind. Okay, Starbucks, we'll categorize that. Another Starbucks, categorize that. Okay, here we have Sunoco. So this is a gas station. So we'll say Sunoco, and then for the category, we'll create a new category, and then I would probably consider this to be, we'll say auto, and I like to call it car and truck. So everything, if you go to AutoZone and get supplies for repairs and maintenance for your car, or parking for your car, gas for your car, anything for your car, it can go under this car and truck category. Keep in mind, if you're taking the mileage deduction, you cannot take the expenses for your car. So you have to choose one or the other. Either you take the mileage deduction or you account for all of your expenses. Okay, I included this one here, T-Mobile, just because I like to point this out. Some people call T-Mobile like their cell phone or their internet. They would call that utilities. I do not like doing that. I would probably consider this to be office supplies. So I like to categorize my cell phone bill and my internet as office supplies. So I will group that with office supplies and software. So just keep that in mind. And then once again, I would also consider that to be general overhead. So if you're paying for things like an Adobe subscription or a QuickBooks subscription, or like probably any online software, unless it's for advertising and marketing, I would group it into this office supplies and software category. Okay, now the final transaction we have here is this wire transfer. Now keep in mind, this is specifically for real estate investors, and if you've made it this far, you're probably very invested in this QuickBooks tutorial, so I saved this for last. This wire out is the purchase of a house, and now I'm going to show you how to do a journal entry for the purchase of a house. So you're going to have to look at your HUD statement from the purchase. Okay, so this occurred on July 1st. So here we have to do a journal entry. Now, if you are not comfortable doing this, by all means, please consult with your tax professional. But if you want to take a stab at trying to do this journal entry, you definitely can. So we're going to add new, we're going to add a fixed asset, we're going to add a building. We'll just call this 123 Main Street. I do believe that's what we called it. Yep, 123 Main Street. Now we'll just say the purchase price was $200,000, the contract sales price. And then we also have capitalized with the purchase of the asset, we have an additional $5,450 of settlement charges. If you look at your HUD, you will most likely see settlement charges whenever you purchase a property. Okay, so settlement charges, and then sometimes we're paying for property taxes whenever we buy a property. So here we'll create a new account for property taxes, and let's just say you paid $345 city and school taxes. So that's an expense whenever you buy the property. So we'll do 123 Main Street for the class. Okay, now we have a loan. So you bought the property, and now you need to create a loan for the property. So we're going to create a long-term liability, note payable. I like to do it like this: loan 123 Main Street. Obviously, if you have hundreds of properties, you're not going to be able to create a new account for every property. But if you're just getting started, I think this is a great way to keep yourself organized. Okay, so we're creating this loan account, and now let's say the loan was for $180,000. Okay, now one of the last things, so we have to account for the money that came out. So this will be cash from borrower on your HUD. This will be at the bottom of the HUD. And then just to keep this simple, let's assume our settlement charges just help balance out the equation. So obviously, if you have an actual HUD with you, these numbers will be perfect. But okay, so in this scenario here, okay, so we bought a property for $200,000. There were $9,789 of settlement charges, which get capitalized into the value of the property. We paid for $345 of property taxes in advance. That does not get capitalized, that gets expensed. And then we took out a new loan for $180,000 for 123 Main Street. And then finally, we spent $30,134.94 of our own money at closing. Now, I always recommend you can add an attachment to the journal entry. Now, all we have to do is click Save and Close. Now, the final step here, we have this transaction show up in our bank feed, and the dollar amount matches. So we just match the bank wire to the journal entry that we created. Now, we can go look at some reports. So here we can go to reports, and we can look at our balance sheet. So as of July 31st, we have our checking account right here, which is basically just the money that we put in, the original $100,000 minus everything that we spent in July. And then here we have the property, the fixed asset, 123 Main Street, $209,000, and that is comprised of the purchase price of the property and the settlement charges. Okay, scrolling down here, we have our credit card here as a current liability, and we have this $180,000 loan for 123 Main Street. And then the last two things here, we have our equity, the $100,000 of owner's equity that I was talking about, the original deposit we put into our business checking account to get started. And then finally, we have here our net income. Okay, now last thing I want to show you, pretty cool here, we can look at a profit and loss by class. So here, profit and loss by class, and then we can see here we have 123 Main Street, we have our contract labor and our property taxes. 5 Dolly Street, we have more contract labor, supplies and materials. General overhead, we have the office supplies, and then everything that's not specified. And what you can do is you can click on this amount right here, and you can see here is a list of all of the transactions we categorized that were not specified to a class. So if you have multiple properties and you are doing class tracking, it's really important that you accurately allocate a class to every single transaction. So on a weekly or monthly basis, you want to go in here and check to see which transactions did not get a class. This adds a whole extra step to your bookkeeping, but I promise you it's going to pay dividends whenever you have accurate reports that you can actually use to judge the profitability of your properties. So I hope this video was helpful. Let me know if you want me to keep making more QuickBooks tutorials like this. If you are a real estate investor and you need help with your bookkeeping, I'd be more than happy to help you. If you are an aspiring bookkeeper and you need help, like I said, schedule a one-on-one consultation with me. I'd be happy to help you with whatever you have going on.